We are live.
All right.
What's going on, B? How you doing, man?
Man, I'm blessed. Like my man Billy Osbrooks, blessed and unstoppable.
Blessed and unstoppable, man.
Blessed and unstoppable.
Absolutely, man. Thank you for joining the Buy the Block podcast with Bryan Chavis. I'm Nathan Johnson, and we're here to teach you how to buy it, rent it, profit. B, once again, man, always a pleasure having you in the studio, brother.
Man, it's always good to be here, man. It's just blessed to be here, brother. Blessed
Absolutely.
to be here.
Man, I wanted to talk about some current affairs. So I'm hearing a lot of things like about rent control. We've seen it happen in California, and we're starting to hear rumblings of it here. Love for you to give us your take on rent control, where you see it's heading, and like how does that affect property managers and asset managers overall?
Yeah, and like you, obviously, that's the hot topic, and I see it. I mean, first got introduced to it in the New York markets, out in California.
Yep.
Because Florida is a vastly growing market. I mean, you can just look at the statistics. Unfortunately, that's something that, it's going to be looked at.
Yep.
You hear murmurings in the St. Pete area where I'm at, where, they want to introduce legislation, to address, affordable housing.
Right.
I need more information, of course, so I kind of sit back and listen.
Yep.
And I kind of survey the landscape.
Right.
But right now, my knee-jerk reaction is it's not good. Not as from the investor standpoint.
Correct.
From an individual that's in need of housing in these urban core market areas. It pans out for them. The problem that I foresee is if you pass such legislation, investors like myself are going to go elsewhere, and who's going to step up? And clearly, I mean, people can say, well, yeah, that's what the housing authorities are for, affordable housing. And a lot of them, are not, may enter the private sector, may offer, a project that offers, affordable housing or whatnot.
Mm-hmm.
But for the most part, a lot of them don't do it well.
Right.
And it's the private money, it's the equity firms, it's the small private operators, that are going out here buying property and if you tie their hands, I mean, I think, if you don't have, if you just simply come across and say, hey, listen, we're going to blanket you with rent control and you cannot charge anything over X.
Right.
You're going to eliminate a lot of the investors like myself. And then what are you going to replace them with? So I think a lot of people, what you have to do is you got to think through this. And for me, it's like, I can offer affordable housing in downtown St. Pete. Give me a better alternative on my taxes.
Right.
I'm paying $31,000. And I would pay more if I didn't pay on time, but because I'm paying in November, I get a 4% break. But you want me to offer, more of an affordable solution, then you got to come up with some, offer me a better alternative on my tax bill, and I can offer you some affordable housing. One of the main reasons why, I have to push rents is because of what I'm paying property taxes wise, utilities, the cost of doing business goes up. So, at the end of the day, I can hear people jumping in and the city council and everybody chiming in and offering their 2 cents.
Right.
But, if they're not an investor themselves, it's kind of hard to just say, hey, listen, investors, you guys need to stop raising your rents. Well, stop raising my property taxes.
That makes sense.
So,
I mean, we were in a scenario.
But to expand on it, I understand why you have to raise property taxes, but, offer, if you want to rent control, offer some sort of incentive on, if I say, hey, listen, not just a blanket proposal to, cut rents at a certain point where you can't charge anything over $1,000 for a studio. To me, that's a no, because you're going to push everybody out of the market, and it's just going to cause, you're going to cause more, there's going to be more. I don't really think you understand exactly what you're doing when you open that box, Pandora's box. as far as the repercussions of not having investors come in, private money coming in, or these individuals such as myself coming in and entering into the marketplace. But you have to have a plan. And I don't think, I haven't heard anything like, what the plan would be, because again, a lot of individuals are not raising the rents because of greed and profits. And sometimes that's a part of it, and that's why we're getting into this business, to be able to raise rents, but you also don't want occupancy to suffer.
Okay.
So at the same time, yes, I'm raising rents, but I'm only raising it according to what the market is allowing me to do.
Right.
So, I'm not raising rents because, I said the other video, King Solomon says an empty stable stays clean, but there's no income in empty stables. I can raise rents, but if I'm not leasing these units up, I can raise rents all I want. I'm only really raising rents according to what the market bears.
Right.
So for me, it's like, if the market bears and people are paying, if I bumped them up from $750 all the way up to $1,000, and my occupancy is not really dropping, and I notice that when I'm looking at my rent rolls, and I'm looking at the units that are vacant and how long they're sitting on the market, if I'm, if it goes from 3 days to 7 days, that's something that I can live with to get an extra $80, $90, income. That's something that I can live with when you look at the loss to lease, by it sitting, and how much money you're losing by it sitting vacant while you're marketing the unit. I can live with that. If I'm getting $1,000, $1,100 and it's only sitting an extra, 7 days or so,
right. Something
I can live with. But again, the point is that I'm only pushing the rents to where the market can, so if the market doesn't, if the market doesn't bear it, then I wouldn't receive it. I wouldn't be able to offer those rents. So obviously the market can handle that. So, and so what I'm thinking about is a downturn in the market and what would affect. But of course, being in the core market, it insulates me. You're not going to see the higher returns, but you're going to see the efficiency of the investment, and you're going to see a lot of insulation from the volatility that you may see in other projects. So, that's kind of, it's vague. Rent control, to me it's a negative because you haven't really thought through the process. But like I said, if you really want to to enact some sort of rent control, I think it would be wise to talk about how you can help the investors make money. So you look, or not make money, but you look at things like property taxes and being able to offer incentives if you offer a certain percentage, to workforce housing. There's things that we can do, come to the table and have conversations to where we can actually offer some sort of solution and offer some sort of affordable workforce housing in these core markets. And but it's a give and take.
Right. I see some of we're looking at a deal right now. One of the investors came back and said, the returns look a little low. Mm-hmm. So when we're looking at these, 10% returns, higher, so on and so forth, and you're putting together these 7 to 10 year projections, is that something that people should factor in as well?
I'm ready to jump into this conversation.
You've got this whole projection. I'm going to get you 10%,
right,
and then all of a sudden you get slapped with rent control, and that just out the window.
Yeah, I mean, and again, we're not going to speak, rent control, and again, it's just too early. Yeah, we see what's going on in California. Like I said, I think it's a negative because it's a positive for us right now because you see a flock of. It's a negative and a positive because you see a flock of investors coming into this market looking for deals now, being forced out of Cali and forced out of New York. So now they're looking at the Florida markets.
But what's your take on it? So, I mean, I can get higher returns. 6.8 is low.
And this is where I was getting excited to jump in is because, this is true. You can get higher returns. But you got to understand when you're looking at higher cap rates and higher cash-on-cash returns, you typically, when it comes to multifamily, you're looking at more risk, a more riskier investment. So when an investor says, Bryan, those investments look kind of low. Yeah, but you're in a core market. It's a negative if I was in, people who may not understand, geography, like location, what we're talking about. If I was to look in a, middle income or moderate income or look in a lower income neighborhood, and I was going to get a 6% return, then that's, to me, that's something that I would walk away from. But if you're going to give me a 6 to 7% return in a core market, like a downtown St. Pete, a downtown Tampa, that's something I'm gonna strongly look at because I understand the appreciable value on the back end.
Okay.
I know you don't from real estate. They teach you never look at appreciation, but to be honest with you, we do.
Right.
I know I do.
Yeah.
I look at where I feel like, when it comes time for the disposition of the property, where we're going to be at, i.e. the exit cap.
Right.
You have to look at that. You have to look at being in the core market and the asset being more appreciable. And then you also look at for the fact that you're in a market that is going to be flexible and allow you such luxuries as not to be so volatile to economic changes or softening of the economy. So for me, downtown St. Pete, you might see a smaller return, but you're seeing a much more efficient return, and you're seeing, for me, the 6% you're paying. You're paying a premium for getting a less volatile asset.
Okay.
So It's you're paying a premium. So I don't necessarily look at that 6% as a negative. I look at it as a positive. I'm in a core market. I'm going to get paid as an investor. I'm looking at the long. I'm looking at the motion picture and not just a Polaroid snapshot of the investment. Right. In the long run, this investment is going to do and pay dividends for me because if I'm well managed and well operated, I'm in a core market that insulates me from a lot of the volatility that you may see with a lot of these assets and a lot of these markets that are showing higher returns. Right. But may be subject to, during an economic downturn or softening, may be subject to higher vacancies, softening of rents, things of that nature.
Hey, no, that makes sense, man. And to me, it seems like, based on what I've learned working with you, some of the 10% offers, that's more of an educated guess. And,
well, it's all an educated guess too, Nate. Even my 6% return, it's an educated guess. I'm not banking on. What I'm saying is bank on my ability to operate the property. Okay. And bank on the market, bank on the ecosystem that is downtown St. Pete. Bank on the fundamentals that you see, that the employment is highest fiscal rating for a municipality. All the employment, the schools, the jobs, all Children's Hospital, St. Joseph's, USF, St. Petersburg College, banking on all, the retail shops, all of what downtown St. Pete has to offer. That's what I'm asking. That's what you're paying for. That's what you're paying a premium for.
Right. I love it, man.
And I'll add, and if you're an investor looking for a 10% return, be smart.
Right.
With your portfolio, be smart with your money. Put money into a 6-7% multifamily, which over the long run and historically is going to give you a return. May not give you that home run, but brother, get you a couple of singles, get some men on base. Okay. And if you want to do a more aggressive and you want to get more aggressive returns, which much more riskier investments, then, have a portion where you can play a little bit and participate in a little bit riskier investment. But you need to back in a portion of your money, your capital, into solid investments. And those solid investments are typically not going to give you the higher returns, but they're solid. They'll be there for you. They're Old Faithful.
Hey, Old Faithful. Speaking of faithful and getting the best deal, I want to take you through, or I want you to take us through your book, Buy It, Rent It, Profit. The
Bible.
Chapter 3. There's a section in here that says getting a good deal, and it starts on page 30. So as you guys are following the podcast, we encourage you to go into your local bookstore and pick up Buy It, Rent It, Profit. This is a really cool area, man. Talking about getting a good deal. I want to take you through some of these and explain in your own terms, what do these mean to you? So, you're talking about, targeting the net operating income of the property, middle income demographic, targeting the correct unit mix. What is your philosophy on getting a good deal? What should people be looking at in your own terms?
That's a good question. For me, it starts with the demographics and psychographics of my prospect tenant. Okay. Not so much the building or the deal. Right. So I really want to understand who downtown St. Petersburg is. Who are the individuals in downtown St. Pete? what's their demographic makeup and psychographic makeup. Demographics tells me who they are. Psychographics tells me the why they make certain decisions. So once I kind of really understand who the individuals are in downtown St. Pete, then I find a product that fits those needs. And then, obviously you back in, your return, then you work from the top to the, from the top.
Okay.
Does that make sense? You work from the top down.
Right.
And so, until you get to your bottom line and your numbers and your returns. And then, as a general partner or a syndicator, then you'll be able to look at a deal and say, this is what I feel like I can get the returns at a 6-7% in this downtown market. Then you look at from a general partner standpoint, what percentage you'll take, what percentage you're going to offer a pref to your investors. Obviously, you just said 6%. So what does that waterfall structure look like on the back end? Because ideally, if you offer 6, you probably feel like you can get 7 or 8.
Right.
So, on the back end during your waterfall structure. So what do your fees look like as a sponsor? So you begin to back in all that, and then that's how you create your waterfall structure as a general partner. But a lot of what you're doing and a lot of the homework that goes into this for the due diligence, because there's several, everyone speaks due diligence, but, not too many people get into the layers of due diligence. Right. It's granular, it's granular. So there's many different aspects of due diligence. There's due diligence on the actual target market area. There's which we call COTA, strategic evaluation of target area. That's a form of due diligence. There's 2 forms of due diligence when it comes to the actual property itself. Okay. There's the what we call, or I call, the forensic audit, which is going through all the accounting aspects. The T12s, T3s, matching leases to what's actually in the bank account, so on and so forth, et cetera. Right. And then, and then you're looking at physical, which is, the maintenance and things of that nature, and looking at the property and having your maintenance and your contractors walk the property to give you an idea of what you're actually inheriting. Right. Because everything looks good. I'm looking at a deal right now, downtown St. Pete, and they're slapping paint on the we went to walk the properties and we see the guys, putting paint and, really putting lipstick on the pig.
Exactly.
So everybody's going to try to dress the thing up and throw it out there, so you really got to know, what are you buying? You'll see Joe in the video go through and say, Brian, look, there, this is siding. This is, look behind, look under the siding. So, when you, doing your homework, having your contractors walk the property, having your maintenance technicians walk the property, that's a form of due diligence. We have that in a spreadsheet. I shot a few Facebook videos where I'm going through and showing everybody, and I'll do it again. But, it's various levels of due diligence. But for me, that's really what it is I'm trying to figure out who my prospect tenant is. And then I try to find a product that fits, and i.e. the product, as a private equity firm that deals with multifamily, my product is apartment buildings. Right. So to try to find an apartment building that fits that need. And then you have various challenges. The challenge in downtown St. Pete was there's not too many apartment buildings, 200-300, 400 unit apartment buildings in downtown St. Pete. That's not Class A, new construction. So you have to find these smaller deals and piece them together and create your portfolio that way. So it's a little, that offers challenges in itself, because some of the product, not all of the product is like Park Plaza. Not all, everything's concrete block garden style. I wish it was. Right. A lot of this stuff we're looking at, is wood framed. Offers a whole set of different challenges. So now it's like, what is your criteria now? A lot of people would shy away from that, and I understand that. But my play is more so on the land and where the property is located. So, there's reasoning behind what it is I'm doing and what I'm offering.
Excellent. And then as far as putting together the right team, you talk about how important the right team is. What are some of the team members that you put in place when you're trying to go after a good deal? What are some of the pieces that you have that you bring to the table?
Yeah. And I'll say this all the time. You've heard me say it. Yep. Probably gonna, you can say it right now.
Absolutely.
You know what I'm gonna say. If you're the smartest person on your team is in trouble. Right. So at the end of the day, it's just really building that team. And for me, that team consists of, a few underwriters, junior underwriting and senior underwriting. Yes, I can underwrite, right. But I don't want to spend my time underwriting, so it goes to junior and senior. Then it comes to me, and I look and I mock it up. And sometimes I go back and forth with these guys. but I like it because it's giving me an objective view. And a lot of them are not from this market. So I know I'm getting a view based on numbers, and they keep me humbled,
right?
And they keep me focused. So you have your underwriters, then you have your project manager, who's really important, like especially with these projects in downtown St. Pete that require a lot of rehab, to be able to stay on top of permitting and understanding, how to put the contractors together. So, our guy, Joe, has a vast amount of experience in flipping houses and working with contractors and things of that nature. So, having a project coordinator on your team, great maintenance guys, your maintenance technician, your contractor. I'm going to lean heavily on one of the guys that are in our multifamily matrix coaching and consulting group, Carlos Henry out of Tallahassee. Is a licensed contractor, licensed roofer. Excellent. Bringing him in, giving, and then getting a report back to him. So, having a team, is extremely important. And then, for those who are listening on the podcast, a lot of people will be like, man, how do I get a team? For us, that's kind of why we do this podcast and why we do a lot of the education and training, because, my team is anyone who's a part of our multifamily matrix. These individuals become a part of their team as well. So, our resources are their resources. So, and then the attorneys, we're going to be using Paul and Adam Vincent. You can see them. They're very active on social media. Really good guys, and at the end of the day, you got, everybody on your team, for the most part, I'm fortunate that we all like each other and respect each other. Exactly. But not always needing to be the case. I played, on plenty of sporting teams where not everybody liked each other, but we came together for a common good.
Right.
So I don't necessarily have to like you for you to be on the team. I mean, of course, at the end of the day, you want to do business with folks that you admire and folks that that have the same vision. But sometimes you're not going to have people that play these skilled roles for a season in your investment. Hopefully everybody shares the same values. You're going to want to work with contractors and vendors that have a value system in place. But like I said, you may not mesh with everyone. You may not want to go out to have drinks or dinner, or you make families and enjoy each other's company. And that's really, for me, that's not always what it's about. I understand that we come together for a common goal. Right. And, as long as we show up on game day and we all know what our jobs are and we perform those jobs and those duties, that's the most important thing for me.
Hey, no, I love it, man. Thank you for always dropping these gems of wisdom, man. And, I look forward to just continually speaking with you, man. And, once again, guys, all these resources can be found on bryanchavis.com. So we don't just talk about it. We do add all these resources to our website. So as you're looking to, grow your knowledge in rental investing, grow your portfolio, you can go to bryanchavis.com. You'll be able to follow us, get all the resources, get coaching and training, and then also be a part of our new program, Multifamily Matrix. That thing is just getting better and better each week. So, once again, Bryan, man, thank you so much for all your wisdom.
Absolutely.
And look forward to speaking with you next week, man.
Yeah, we'll see you next week. And hopefully by the time I'm not sure when this will air, but, I will be live at the TB RIA event on a panel of experts. So if you want to come out and meet me and, if you bring the book, we'll do a book signing, but we'll be at the this month's main meeting for Tampa Bay RIA. So definitely go out, check them out on their website. They always have great speakers, but I'll definitely be there this month, in the month of November. So we'll see you there. There's a chance to get us live.
Yep. Because
our meetup and our apartment social event won't be happening until January. And then also, if you don't mind, Nate, I want to just drop our conference that we're coming, that we'll be doing. Guys, big news is that we'll be bringing a certification conference to where you're going to come and get certified for apartment underwriting, property management, and asset management. We're going to give our designation. At this time, we're going to be performing our CRIS designations, which is Certified Rental Investment Specialist designation. We're going to be holding this conference the first of 2020, first quarter of 2020. Date will be announced, but this is going to be a conference like no other, because this is a place where it's unlike a boot camp. It's going to be you're going to come here and get education, training. If you're a licensed real estate professional or broker, you come get your CE credits, 8 hours of CE. So our event will offer CE credits. We're gonna have 3 hours of training. We're gonna have some of the best minds in the multifamily business as guest speakers. We're gonna also have tons of a lot of the people we work with behind the scenes, Buildium, Renometer. I mean, there's a ton of people that we're going to be bringing that are going to be guest speaking. We're going to have a couple of people coming in guest speaking about best practices for underwriting. We're going to have a ton of people. Airbnb. We'll have a few guests coming in and speaking about Airbnb and best practices, so on and so forth. But anything that encompasses multifamily housing, we're going to have some of the top minds, CEOs as well on our panel of experts, and it's just going to be a great event. Come out, get trained. And we'll see you guys there. So just keep that in mind in 2020. The event is called Buy It, Rent It, Profit Live.
You can hear more about that at bryanchavis.com. Just go to bryanchavis.com and you'll be able to get up on all the information about the upcoming events. And once again, Bryan, I'm excited for the event coming up, man. And definitely always a pleasure speaking with you in the studio, brother.
Thanks for having me, man.
All right, my man. Take care.
See you soon.